Hello, and thanks for tuning in to our channel. My name is Awni. I am a local real estate broker out here in the state of Arizona, bringing you that real estate knowledge and insight. If this is your first time tuning in, this is a real estate channel. I like to discuss the local market data and insight. That way it can help you out with real estate investing. That is really Chantell and I's main specialty. We help a lot of buyers, sellers, and landlords with tenant placement services as well. So if you're looking for a great caliber tenant into your home, we do the whole thing from qualifying to showing to advertising, everything, drafting up all the contracts, facilitating the transaction. But if you want more information, just give me a call, or you should see a link here to our website. Phone number is 480-788-4118. So today's video, I was talking to Chantell the other day, and I thought, you know what, looking at all these numbers and what is happening with the real estate market, we work with a lot of investors that have flipped, and they do some buy and holds as well. And I thought, you know what, is right now a good time to be flipping houses? So I wanted to share this video with you, and I'm going to get right to it. If you are not aware, mortgage rates right now are hovering over 7%, which is making it very challenging for buyer affordability, and it's also pricing a lot of buyers out of the market too. Inflation continues to pressurize labor costs, sending home building and renovations skyward. Things are increasing. If the experience like in the 1970s repeats, which is the high inflation and the low growth, investors are definitely going to be in a prolonged period, negative real returns of bonds and equities. Home prices are starting to dip as sellers recalibrate their list prices for falling demand. Inventory is increasing. Homes are staying on the market longer. Lots of price reductions we are facing lately. Credit to buyers are being offered, further decreasing those net proceeds. If you are an inexperienced real estate flipper, this may be a very difficult time for you, and it's going to get even more difficult. The big question here is whether the fix and flip market is going to lose steam, as home sales have declined dramatically over the past couple of months, and the cost of financing has virtually doubled over the past year. And for the last 15 years, we have been in an environment where the interest rates have been very low, and it'll be challenging for everyone to recalculate their numbers. This is definitely going to eliminate some of those novice flippers, and some of them are just going to get out of the business entirely. The rising mortgage rates that we are seeing is having a major impact on the housing affordability and an immediate effect on the home sales and the buyer demand. Buyers are becoming more selective. There are more listings on the market, and they aren't as apt to outbidding other buyers these days. The bidding wars we haven't seen in quite some time now. We are actually seeing more buyers that are receiving incentives from the sellers. Not only are we seeing those price reductions, but we are seeing some of these strategies like the 2-1 buy downs, seller concessions, credit to the buyers. Flippers are seeing more declines in their profits. Shifting market dynamics are having an impact on how they're making their money. If mortgage rates continue to rise, which they will. We know that the Feds are going to have another meeting in November, December, February. They're going to keep raising those rates. This is going to have a very big effect on real estate flippers. Real estate investors are in the business to make money, so smaller returns have a dramatic impact, like how much and what kind of repairs they are going to do to their properties, or whether they hire fewer people to work on the property, or they might just leave the business entirely. I was reading a Bloomberg report, and I saw Opendoor, which is a company that innovated an online form of home flipping, which they're called iBuyers. These are those large institutional investors that you see that are buying in cash. They actually lost money on 42% of their transactions in August. The losses were way worse in markets like Los Angeles at 55% and Phoenix at 76%. They are very close to where Zillow was in its worst moments. And over here, you could see Opendoor warned the investors that it expected to lose at least $175 million in adjusted earnings before interest, taxes, depreciation, and amortization in the third quarter. Now, our second largest iBuyer, which is known as Offerpad, they are headquartered locally here in Phoenix as well. They adopted a very different approach to the market downturn in comparison to Open Door. The data in which I'm about to talk about with Offerpad came from our friends at Cromford Report. Offerpad found themselves with excessive inventory after the second quarter purchases. They bought 446 homes between April and June, but sales dropped alarmingly from May onwards, and by the end of August, they had 496 homes in stock. Their monthly sales dropped from 217 in March to only 31 in August. This means that at the start of September, they owned 16 months of supply. They reduced their buying activity dramatically from August onwards, purchased only 22 homes in September. This is down 86% from September last year. So they put more effort into sales, but they didn't make the huge cuts in asking prices that we saw from Open Door. They maintained their high level of buyer broker compensation, again, unlike Open Door, but have not reported large concessions to buyers, again, unlike Open Door. And as a result, their sales have picked up slightly and numbered 43 in September, down 51% from the year before, but only from 496 to 473. And this still represents over 11 months of supply. 11 of their 43 sales were in bulk to institutional investors and handled outside of the MLS. This strategy actually led to a huge drop in sales and purchase volumes, but it avoided the large negative gross margins experienced by Open Door. In September, Offerpad sold 43 homes for $18.8 million, which cost them $18.8 million. 56% of those were sold for less than they cost, and 44% sold for more. So this left them with a slim but positive contribution margin of 0.3%. It's not as much, but it is a lot healthier than the negative 10.2% that they calculated for Open Door using the same methodology. I've got another chart for you. ATTOM, a leading curator of real estate data nationwide for land and property data, they actually recently released a report in August, and you will see the chart on the screen here showing that 115,000 single-family homes and condos in the U.S. were flipped in the second quarter, and those transactions represented 8.2% of all home sales in the second quarter of 2022, or 1 in 12 transactions. And the latest portion was down from 9.7%, or 1 in every 10 home sales in the nation during the first quarter of 2022. Home flipping rates dropped in 80% of local markets. So definitely home flippers are feeling the pain. They're slashing their prices, or they're deciding to turn them into rental properties. We actually had multiple sellers who took their properties off the market because they didn't want to keep reducing further and further and further, and they just turned them into rental properties. The fix and flip business, they tend to hold their properties for less than 1 year. So if you go through any sort of pricing correction and you bought at any peak period and then you try to sell quickly thereafter, you may lose money on that transaction. So can you still make money with flipping at this time? Well, sure, but it's not going to be as much. Your spreads are going to be far less because timing is everything. Home prices aren't accelerating at rapid rates like we have seen over the last 2 years, and predictions are mounting for 2023 that we're going to see year-over-year price declines. All this really means is it's going to be increasingly difficult for home flippers to turn a profit. We have several full-time flippers that have significantly slowed down their business, and they're sort of waiting to see what will happen in the coming years here. And of course, we are certainly keeping them updated with our market insights. Very important for us to do so. Are you currently flipping homes? Please drop a comment, let me know your experience. And of course, if you want to stay updated with our local market here in Phoenix, Arizona, you can always watch these videos, or you can reach out to me at 480-788-4118. Thanks for checking out this video, and I'll be back with another one soon.